There's lots of coverage of the Eurozone on the BBC this week. There's a big EU summit happening on Friday, and ahead of that there's a lot of concern because the ratings agency Standard & Poor's has put most of the Eurozone on a credit watch list. The economic picture in Asia, though, is very different from what Europe is experiencing, leading to hopes that the power of Chinese consumers perhaps can make a real difference to the global picture. Some even believe China can save the world economy. To put things in perspective, for all China's rise, its economy still accounts for less than 10% of global GDP at present. The developed nations of Europe and America make up well over 50%. And the Chinese middle class, although growing, is still in the making. Consumption in China is around 34% of GDP, which is a relatively small part of the economy. Figures out this week show growth of just over 9% between June and September. That is actually the slowest rate in China for 2 years. Well, let's speak live now to Jonathan Holzleich from the Brussels Institute of Contemporary China Studies. And in the studio with me is Helen Wang, who's the author of The Chinese Dream, the rise of the largest middle class in the world. Helen Wang, obviously you've written a lot about this subject. What is the potential of the Chinese middle class, do you think, in terms of real spending power?
Oh, yeah. The Chinese middle class currently is already more than 300 million, which is about the same size as Eurozone of population, and the Chinese middle class will reach 800 million in 15 years. And a recent Credit Suisse report indicates that the Chinese consumption will reach $16 trillion by 2020.
But even though the size of the middle class is growing, it's fair to say that the spending power of consumers in China is still far below the spending power in the West.
Well, spending power is growing very fast. As I said, by 2020, it could reach $16 trillion will be the largest consumer market in the world.
Okay, well, let's bring in Jonathan Holzleich and see what he thinks of all of this. How much do you rate the spending power of the Chinese middle class in terms of what it could do to help global exports?
Well, in the first place, only 5% of Chinese citizens spend on a European level, so that's still very, very small. And I think that the standards usually used to measure Chinese middle class have to be put in context a bit. We see, for instance, real estate prices squeezing what Chinese could spend on other goodies, on household products, and so forth. I would also not to take for granted that it is going to grow that rapidly and that we will reach 16 trillion by 2020. All in all, it is still developing rather slowly. And it's also still one side of the coin. China produces still much more than it actually consumes domestically, and this will continue to challenge to some degree also European development.
But you would accept, wouldn't you, that the trend is towards the growth of the middle class? That's the way it's going.
Absolutely so, but for me the main issue is to which degree China is going to rebalance its economy and to which degree the Chinese middle class is actually going to mop up to consume what it produces. As long as we don't see this rebalancing to take place, I don't think we should be over-optimistic about China coming to the rescue of the rest of the global economy.
Helen Wang, that's the point, isn't it? Whether Chinese consumers choose to buy these products that Europe desperately wants them to, or whether there's enough goods in China that they should buy.
Well, first of all, I would say Chinese middle class actually growing very rapidly, and Chinese consumers would like to buy European products. Particularly, they like to buy products made in Italy, made in Europe. And as a matter of fact, many European brands are doing extremely well in China. Louis Vuitton, Cartier, and basically Chinese consumer helped to revitalize American auto industry. Now more Buicks are sold in China now than in America.
But the point about things being made in Europe, I mean, that is a really shrinking proportion. I mean, you're talking about the high-end products, and some of those are still made in Europe. But again,
yes,
some of those biggest European brands manufacture in China.
Yeah, even the manufacturing in China, but still the actual Europe's exports to China has been growing very fast. For example, UK's export to China grew more than 40% last year, and that definitely will help Europe's economy to rebalance, that Chinese economy will also would like to rebalance.
Okay. Well, let me bring Jonathan Holzleich back into this. I mean, there is a premium on a European brand. If that's a trend that grows, would that change your opinion?
Well, I think what is the most important challenge for European markets, for European society, is not so much whether we sell products to China, but whether we will also be able to keep some of the production activities in Europe. I think that basically the issue is, in that regard, that European companies are increasingly asked and demanded to relocate part of the production to China if they want to become part of the burgeoning Chinese market. So all in all, a lot of companies are making profits, but the returns to European societies in terms of investment incomes are generally not that large.
Okay, Helen Wang, just a final word from you. Do you really believe that China can save the global economy?
Well, can save the global economy, that's pretty big words, but definitely China can help, because China wants to rebalance its own economy and towards more consumption, domestic consumption. Certainly that will help West to rebalance its economy from the overspending.
Okay, well, thank you very much, both of you, Helen Wang and Jonathan Holzleich. Thanks for joining us on Impact today.